Good afternoon, savvy investors. Katherine Groce here with some informational tips on how to secure your income in retirement. When we meet with many clients or prospective clients that are nearing or entering retirement, one of the main concerns is how are we going to keep a paycheck going once we're retired? Now, there's different sources of income that you know that you're going to receive in retirement. You have Social Security, you may have a pension. If you're a state and federal employee, there are definitely pensions associated with retirement there. And then you have your nest egg, your retirement assets that you've been saving for retirement. So many clients come to us and they have kind of a shortage where they know that, I have a certain amount coming in from Social Security, I have a certain amount coming in from my pension, but I'm still going to be short for about, let's say a couple $1,000s a month. So let's say your income need is $8,000 a month. You have $5,000 coming in between you and your spouse for Social Security, and you have another $1,000 coming in from a pension one of you may have had. So you have $6,000 a month coming in. There's still that $2,000 bogey where we have to decide where we're going to generate that income in retirement so that you can keep the same level of income once retired. Well, there's a couple ways to generate income. And when we want to set aside assets to generate income, we want to think about that as assets that we're not able to touch. So because we're going to need this money for income, we can't use this money for anything else. We can't use it to buy a new boat. We can't use it to buy a vacation home. This is the money that we're setting aside to meet our retirement needs and our monthly income goals. Well, there's a couple ways to generate income. You can use your stock portfolio, your IRAs, your Roth IRAs, and you can, go with the ebbs and flows of the stock market and take withdrawals from your portfolio. When we look at that approach, we always recommend that you set aside at least 3 years of reserves in case the stock market goes down, for several years in a row. You're not taking from a portfolio that's going down. And then also we want to assume that you're making about a 4% rate of return. The stock market over time does about 6%. So we just like to do 4% as a conservative estimate in retirement because you're investing a little bit more conservatively. So let's say you need to set aside that money from your IRA or your 401k to generate the income in retirement. So that amount would cost you about $672,000 a month to generate that $2,000 a month that you had the shortfall there. So with the stock portfolio, there are some other options. You can do a preferred stock portfolio. Now, preferred stock portfolios have funds and stocks that generate income via dividends, whether they be monthly, quarterly, semi-annually. With that type of income generating portfolio, we recommend that you have at least 1 year reserve, as well as expected rate of return or dividend rate of return of about 4.5%. With that being said, that portfolio, you would need to set about $557,000 aside to generate that $2,000 a month shortfall. Now, the third option, we are transferring the risk from yourself in the stock market over to an insurance company where we use a guaranteed lifetime income annuity. These are typically index annuities. They grow when the stock market's up. You don't lose money when they're down. They have a guaranteed lifetime withdrawal benefit that grows at some rate of return, compounding, that doesn't rely on the stock market. And then once you are ready to elect that lifetime income, they pay you out a certain percentage based on you and your spouse's age for life. So even if the count value goes to 0, they guarantee you that monthly payment for the rest of your life. And you want to make sure when you're looking at income annuities that you are looking at ones that do cover both you and your spouse. So with the guaranteed lifetime withdrawal benefit approach, let's say you're 65 and you would have to set aside basically $474,000 from your portfolio to generate that $2,000 a month that you need. So with all three options, you're setting aside between $450,000 to $700,000. It all depends on how much risk you want to take. If you want to take the risk in the stock market, if you want to transfer the risk to an insurance company. But this is a conversation that you should be having with your financial planner as how to generate income in retirement. They should go through all the pros and cons of each option and help you set up a plan so that you know when you're retired that your paycheck is still coming in. If you're not working with a financial planner that is setting up retirement income for you, please give our office a call at 410-863-1040. Again, 410-863-1040. Hope to see you in the office soon. Thank you and take care.